Head of Asia Research at ANZ Research, joining us this morning. Thank you so much for speaking with us, Khoon. Let me start by just looking at the whole Asia basket and everything that Trump is talking about, because fresh set of tariffs have now come in.
Yeah, good morning to you. Look, I totally agree with you in the sense that the tariff on pharmaceuticals, or the headline looks really alarming at 100%, but it's only for branded and patented drugs. And for India, the majority of the production and exports are generics, so that will be exempt. Now in Asia, Singapore is the other country that will be impacted because Singapore does have a fairly large pharmaceutical cluster here, which is largely patented drugs. But quite a few of them are US companies. So the question around that loophole is breaking ground, under construction, does existing facilities count? Details are important, and details are scant at this stage. So we'll just have to wait for more clarification in terms of what is exempt. And the same goes for the other tariffs on trucks, etc. Do existing trade deals that have been struck mean that the lower rate will apply rather than the higher sectoral rates as it does for cars? Again, we have to await those details, which is why you've seen markets not overreacting at this stage to these announcements.
Khoon, morning. I just wonder what you make of the latest data coming out of the United States, because you can't make sense of it directionally, seemingly, right? Because you have GDP data that's revised upwards, you have the jobless claims data, which has been trending in a certain direction, suddenly moving the other way, dropping to 218,000 from 232,000. I'm wondering what the end of the week data will point to. So do you see directionally that there's a weakening, or would you disagree with that and say that there is a fair bit of strength still evident? Or do you expect that some of what we're seeing on the tariff side, on inflation, etc., will come to bite later on?
There's no doubt that taken as a whole, the US economy is still holding up pretty well. I mean, the outward revisions to Q2 GDP plus the real-time GDP tracking for Q3 is still indicating growth of around 3% and above. So there's no signs of a deeper slowdown in the aggregate US economy. But I think this is where you have to really dig down into the details, because part of the strength of the US economy is being held up by the AI-related investment boom. Now, this boom, while it's great for certain companies, and it's a key reason why US equity market up to recently have been hitting all-time highs, it's not necessarily great for the labor market. And this is where, for the Fed itself, it's really to focus on inflation and the labor market. There's no doubt the labor market has been weakening. The downward revisions and the recent loss in job momentums point to that. So next Friday's payrolls number, assuming it comes out, if there's no government shutdown, will be the critical one for the Fed, as is the PCE deflator tonight. So far, the Fed has admitted that the impact on tariffs on inflation has been milder than expected, and that's key. If companies continue to absorb some of that tariff impact and the pass-through is not as strong and the labor market continues to weaken, I think the Fed will continue to cut rates, and that's my view. I'm looking for 4 more rate cuts to take the Fed funds rate to 3.25% by March next year.
Khoon, I don't know how closely you look at relative multiples of other Asian markets, but just day before yesterday, one of your peer sets upgraded India to overweight, saying that the valuations for India have come off so much that at some point of time, independent of the India-US thaw, investors will return to Indian markets. Are you of the same belief, or do you think differently?
Well, I'm not an equity house, but I do look at relative valuations just to detect how flows might pan out. There's no doubt that there has been outflows in the past few months, and sentiment had turned negative towards Indian assets. I do agree at some point you'll probably start to see valuations become attractive again, and some of those outflows start to come back in. The question is when. I think the pharmaceutical tariffs are not as bad as expected, so I think that might help to have investors start to relook at India again. And if there's a possibility that that 50% tariff rate might come down, I think that really could be the bigger catalyst to see investors start to rethink and maybe start to reallocate back into Indian markets. But in terms of when that could happen, I think we're still waiting for that.
Okay. Thank you for that, Khoon Goh, there with the overall picture. And I think it's becoming clear that a lot of what Trump has announced last evening may have a greater impact on other Asian markets. Relatively, maybe India is going to look okay.